Hi guys, it has been a long while since I last updated my stock market trash talk channel. Today is the day. I would like to give an update about the general market and a little bit of my portfolio update. Let's waste no time and let's get started. And today is 21st September and right now is 11 plus a.m. in Singapore. And the US market is closed at the moment, while the Asia markets are all open. The first thing I would like to look at is the 10-year Treasury note, the US 10-year Treasury note. Okay, I think you guys can see the 10-year yield is actually yielding at 4.4 plus percent per year right now. And if you guys have been following my stock market trust talk for some time, and you could have already known, the 10-year Treasury note is actually at a decade high. Why I say so? So let's look at the 10-year Treasury note in a longer period. So I have chosen this time frame. Over here, it shows the 10-year in early 2006, which yielded at about 4.6 plus percent. And from then on, I think you can see the trend. It went down since then, and at one point, early 2020 is less than 1%. So this means in early 2020, the 10-year Treasury note yielded at about 0.7% per year. And right now, and since that early 2020, it rolled back to this 4.4% right now. That's why I say it's at more than a decade high. The last time it ever hit this 4.4% was in about 2007. Okay, so slightly less than 16 years ago. Alright, so with the 10-year Treasury note yielding at 4.4%, what is the general market like right now? Let's go ahead and look at the general market. So let's look at the US market. So this is the website I have been using for my stocks. And if you guys don't know Chinese, you guys can actually go ahead and do some translation. A pretty easy and convenient tool is Google Translate. Without further ado, let's look at the general market. Right now, the S&P 500 index is at the 4,400 level. And if you look at it from a longer horizon, you can see it's near the record high, which it hit some years ago. Not some years ago, but slightly a year ago. Which was 4,800. Alright, 4,800. And right now is 4,400. So slightly another maybe less than 10% away. Okay, that's where the S&P 500 index is right now. Besides this, there are several stocks I want to talk about. One of them is Berkshire. Berkshire is a listed company, public listed company, managed by Warren Buffett, and it just hit another record high. Okay, it just hit another record high, and I think you can see it has been hitting record high for the past few weeks. Okay, for the past few weeks, and the peak it hit was $373, and right now is $366. Okay, so not too far away from the peak. and this is one of my core holdings, Berkshire Hathaway. The next one I want to look at is markel. Markel, similar story to the, Berkshire. Markel Corp is also a insurance company, which mirrors its business to the business of Berkshire largely, and it's a similar story here. Okay, the record high it hit was 1,558, and right now is 1,542 per share. Right, very close to the record high. And what is the main reason driving Markel and Berkshire, these two companies, hit record high for the past several weeks? One of the main reasons, or I would say the main reason is the yield. Okay, so as an insurance company like Markel Corp and Berkshire, they collect premium from customers, and if they don't have to pay out the premium, I mean they collect premium from the customers as insurance premiums, and if they don't have to pay out after collecting the premium, then the money is actually theirs to keep. Alright, so the business model is quite simple for Markel Corp and Berkshire. If you like to put it in simple terms, basically they collect money from customers, and if they have to pay out, then that is their loss. But if they don't have to pay out and they get to keep all the premiums without paying out, then that is a profit for them. Okay, so it's a very simple business model if you want to put it in simple terms. So the yield right now is trending at 4.4%. So whatever premium they collect from the customers right now actually are collecting 4.4% per annum per year. Okay, that's why high yield actually is a big tailwind for insurance company. And this phenomenon only happened recently when the yield keeps trending higher and higher. Okay, so this high yield environment is actually very beneficial to insurance companies like Berkshire and Markel Corp. On the contrary, if you look at this ARK fund, which is an ETF, this ETF, this ARK ETF is managed by Katie Wood. She used to be a very popular and famous growth investor at one point, several years ago. But at the moment, the ARK ETF is at $40 level. Okay, if you look at the chart here, early 2021, it ever hit $158 at one point, and now it's only at $40. Okay, so it crashed $110, and is living in the shadow of its former self. Alright, why I pick ARK ETF to look at? The main reason is I would like to show you in this high yield environment, the 10-year treasury note is yielding like 4+% per annum for investor. There's no reason for investor to invest in growth stocks. Right? The reason is growth stocks, they don't have a sustainable and profitable business model, and they have to invest, and they have to borrow and invest. So right now, I think it's much harder for them to borrow money and invest. Okay, so that's the main reason why growth stocks are actually underperforming, and ARK ETF has a lot of growth stocks in its component. Alright, so I think that's about it So that's the general market right now. And for my personal portfolio, and my core holdings are Berkshire and Markel Corp. So they contribute about, if I'm right, if I remember correctly, they contribute about close to 60% of my portfolio. So therefore, when they are near their all-time high, so my portfolio is also near the all-time high. All right. So that's a quick update on my portfolio in the general market. So hope to see you guys soon and in the next episode. So see you. Bye bye.